Welcome back to Flint Creek Transport. My name is Justin. As I promised, I said I'm going to talk a little bit about insurance, and I know you guys like the Jake brake sound and the loud trucks and all that good stuff, and that was maybe in some of the previous videos, but this is going to be a little more about insurance. So I have Steve with American National Farm Family Insurance.
Correct.
And Steve will be going over some things with us on insurance. And there's also some things that I found out with insurance that helped us save some money. And I want to pass that along to you guys.
My name is Steve.diveronica. I'm an agent with American National Farm Family Insurance. I've been in the insurance industry for 12 years, owned my own agency the last 9 years, and I specialize in contractors and anything that goes with it. Sensenig's has a landscape company, and we take care of the trucking company as well.
And for us, we actually had insurance for what, the last 4 years, maybe?
Yeah.
4 or 5 years with you guys. We had our complete policy with you, and then we pulled part of the policy and went to a captive insurance group.
Right, because what happened to you guys is we had a lot of losses, unfortunately.
Yep.
And it increased the premium dramatically to where it forced you guys to take another look as going captive.
Yep.
Which again that's you self-insuring is what captive is.
Yeah. And I think I'd mentioned in one of the other videos, our insurance, we got a premium increase of, I don't know the exact amount, but it was well over $100,000. And that's when we had to start looking. And then I looked in the previous of, hey, why did we have such a premium increase? And it was because there was a lot of small claims. I say small claims, nothing crazy, but it was enough to where, it made that price go up.
You went from 92 to 191, and then we got credits and got you down to 170. Trying to focus on credits, which I was able to apply because of the way you run your operation. Besides that, plus safety meetings, the dash cams helped us to allow to put credits on to get it down a little bit better, manageable. But it's still, you guys looked at going in a different direction as far as self-insuring yourself.
Yeah. I said about captive insurance, maybe, and you sell traditional insurance.
Correct.
What is the benefit of traditional insurance?
Well, the main issue is, the main thing would be that you're insured as a claim starting from $1 minus any deductible. Whereas the captive insured, such as yourself, is responsible from $1 paying out yourself until you get to a certain limit. So you have to have the cash available and be large enough in order to go captive. With traditional, you can almost self-insure yourself by increasing your deductibles. A lot of people put a $500 deductible, a $1,000 deductible, and those are the people that are tending to possibly call in a smaller claim, because they've only got a $500 to a $1,000 deductible. But if you raise it to, say, 10, 15, 20, whatever the company, the major carrier has in their limits, you can almost self-insure yourself in a sense. In case something big happens, you're covered, and the company's going to pay for it. But the ones that are under that, under the 15, 10, 5, whatever, you're going to be paying for. So it helps, keep your premium down based on having a higher deductible, and the company knows that you're not going to be calling in small claims, you're going to be handling them yourselves. But anything major will be covered by the insurance company.
In a captive, you're kind of maybe not really stuck with the captive, but like you're there. It's hard to switch out.
It is.
Whereas traditional, like 1 year you can be with somebody and you can price shop a little bit more.
That is correct, and it's hard to get back in once you're in a captive. It's hard to get back into traditional.
Yeah. So, Steve, I guess maybe getting right into insurance, as a trucking company, like we know trucks are a big focus on insurance because they do carry a lot more insurance than just a car going down the road.
Correct.
Right?
Correct.
And in the past, like, it was more so, insurance wasn't a big deal, but now it's becoming a big deal because the premiums are jumping higher and higher. So sometimes you might be able to afford a truck, but you can't afford the insurance.
Correct.
So, one of the first questions, I guess, is how would a trucking company keep their insurance costs down?
It would start with, if you were with a previous carrier, your loss ratios. Usually, insurance companies don't like to see around 3 major losses in 3 years, within a 3-year time. That'll kick you in a different category, a little higher premium. That's one, keeping your losses low. Mm-hmm. Even if they're small ones, if you have some small ones, you might be better paying out of pocket instead of triggering those factors about having some loss. Even if they're smaller, it can still factor in it. The actuaries figure that all out, and we really don't know what the formulas are, mm-hmm. but we do know that the three claims in 3 years is a little less favorable, so it will kick you into a little higher premium that way. Also, about keeping them low would be hiring good employees with good records. The way to do that is when you're in the hiring process, have them do their MVR or their abstract and bring it in with them so you can review it with them and see if they've got a DWAI, a DWI, revoked licenses. Those are all going to negatively impact the premium when that driver is added. So that will kick you up into a higher premium. Also with drivers, their ages. Youthful drivers, if you hire a 21 to 22-year-old, there's going to be a higher premium of that versus a 46-year-old tested and true driver with a good record. So the age discrepancy there will also factor in. But the MVRs are a really big thing to start from the beginning, because we've had so many people that we were not allowed to add them on. They'll hire somebody mm-hmm. and then add them on later, and we'll do the MVRs, and they have a bad record. And you're in a position now where it's very difficult. You hire this guy and say, we can't have you. We can't have you employed here because I can't add you onto our insurance. Yeah. And that'll usually typically come with a lot of revokes of their license, the revocation, and the DWIs, DWAIs really are a no-no. Yeah.
You mentioned a little bit about, pulling that loss run, making mm-hmm. sure, that you're not getting hit with a lot of little small things. And that was one of the things that, I feel, we kind of made a mistake on. We did not watch that. And basically what happened is we had some accidents involving underinsured motor vehicle lists, and what happened is it went back on our insurance.
Correct, on your underinsured.
So they might have paid for the first $5,000 or $10,000, but then if it was a $20,000 claim, then we got hit with the other $10,000, and that's a ding, on your record. And so that was.
But you can't know what the other person's insured or not insured for. That's the hard part. So that's why you have to be covered for yourself.
Yep. Yeah. A lot of times, and if you get a copy of their insurance or talk to their insurance adjuster and find out for sure, what exactly that dollar amount is before you spend the money to fix it up. If you go that route of fixing it up.
That's dialing a little bit deeper, but yes, it's something that you should do. And most people don't. Most people just figure, all right, you've got insurance, we've got insurance, it's going to be taken care of.
Yeah.
Well, until you find out that they're underinsured, they're at the very minimal base minimums for the state requirements, and you're left, picking up the dime after that.
Yeah. Which
negatively impacts your premium in the long run.
One of the things we did too is, like this year, is we set up, we have a budget where we have X amount of dollars set aside for small claims.
Yeah.
So,
a nice position to be in, but not everybody can be in that position. That your smaller trucking companies might not be in that position.
Yeah.
But that's something that you can do, and then just build it up the next year. Hopefully, knock on wood, you don't have those little claims.
And probably a lot of times is if you have a lot of small claims, there's probably going to be a big one in there eventually.
Yeah, true.
And every claim, if it's an open claim, it's frustrating for an insurance company.
Yeah.
Let's say whether you're a independent owner operator whether you're a small trucking company our size, what's the best way to handle an accident? Like, let's say one of the drivers or somebody's involved in a truck accident. Is there steps you can do right then to help protect you?
Take pictures yourself as to where everybody's got a phone now, a cell phone. Take pictures as to the area that happened, if it's in an intersection, any information that you can get at the scene would be good. We usually end up pulling aside, even if you get out and it's right in the middle of the road. Take your pictures where say it's right where it happened, so you've got that. Because then the police are going to come, which is your next thing you want to do is call the police, have them come out, do their report, exchange your insurances in the meantime, and you won't know their limits, as we discussed before. You won't know their limits off the bat, and they won't know their limits most likely either. If you ask them what they were, you're not going to find out if they're underinsured. So doing all those exchanges, but the best thing to do is just go down, get as much information as you can, call the police, and wait for that to happen. Now, there are two ways of handling the claim in that way. Is if they are at fault, sometimes you want to go through if they're 100% at fault, go through their insurance. They'll pay yours. If you're not happy with the settlement process or what they've allotted for you in the claim amount, then you can call your company and say, hey, I want to file a claim. And what they'll do is they'll settle the claim for you, but it's going to be a ding on your policy because the company's paying it, even though they're going to subrogate, which means they're going to go against the other company that was involved, that was 100% at fault, and they're going to subrogate to get paid back. So that still is a minor ding on, even though they're getting, the insurance company's getting paid back.
Yeah.
It's still a ding as far as it being
on your record,
a claim. Yes.
Yeah.
It's a lot less, but again, we don't know. The actuaries do not allow us to know what the formulas are, but it is a minor ding on that policy.
Yeah. So again, guys, I don't know if you heard him, but make sure if you're in an accident and it is not your fault, don't call your insurance up and go through them. Sorry, Steve.
It's okay. No, that's...
Don't go through them. Call up the other insurance information. If it was their fault, call them up and go through them, because it will save you a ding, like you said, on your record.
Unless you're not happy with the process. If you're not happy with the process, then you're going to have us fight for
Yes.
you to get it resolved.
Yep.
And I got to tell you, 9 times out of 10, that doesn't happen.
Yeah.
It gets settled properly on the other end.
Yeah, most insurance adjusters have been pretty good to work with.
Yeah.
How can somebody make their company attractive, maybe to an insurance company? Like insurance, you have to have insurance no matter what.
Correct.
And so how can somebody make their company maybe attractive, or like you say, hey, I want to insure that company?
Keeping their claims low, their equipment properly serviced, cameras. You guys put cameras in. The companies love to see that.
You hear that? Cameras.
They help a lot. They really do.
Yeah.
And doing your MVRs, before you're hiring somebody, have them come in with their driving abstract prior to hiring them, because once you hire that person and they're on the books, then you call the insurance company and say, hey, I got to add this guy on, and he has a terrible driving record. The company can either not put him on at all, or if it's on the cusp there, they're gonna hit you a little higher in the premium because of a driver that's really not up to par.
Yeah.
So those are other things. Do your due diligence in the beginning. Make sure you're hiring people that are best for your company, and they're going to do the best job for you, and not be DWIs, running through stoplights, licenses revoked. So that's a big thing as far as being attractive. Doing safety programs help out a lot, and the insurance companies love to see that too.
Yeah, I think when you go to buy insurance, or you're sitting down with your insurance agent, show them or tell them the different safety things that you do.
Correct.
Whether it's safety meetings that you have, and document them. The other thing we have Samsara, for our dash cams, and they also do a safety rating and a fuel efficiency rating. So the safety rating, it what it does is I think it's a gimbal. I don't know exactly, but there's something in that camera that detects sudden movement. So as soon as they jam on the brakes, it sends a signal, and it will start recording for 30 seconds. As soon as they go around a corner too harsh, it will document that. So we can go back then and watch that video and see what happened. And it basically, then at the end of the day or the end of the month, it gives that driver a score. And it says, you scored, a 75 or a 99 or whatever. And so that helps us or allows us to, some of the drivers that maybe are having a lot of harsh turns, you can go to them and say, hey, going around corners, you got to slow down a little bit, and potentially prevent, an accident.
Do you have a threshold as to how many dings they're allowed?
Not necessarily, no. But each one we're supposed to document, or we sit down with the driver and go, hey, here's what happened, make sure this doesn't happen again. And usually they're pretty good about it. It also detects if they run a stop sign, it will detect that as well. So at the end of the day, it's going to make a better driver.
Absolutely.
The other thing is, maybe we'll get into statistics a little bit. What are some of the, maybe like the claims on truck insurance? Maybe from small to large, or what is the average claim?
The average accident non-injury is around $15,000 per claim. With accident and injury, you're at about $200,000, $196,000 to $200,000 range, without fatality. With fatality, you jump up to about $3.5 million. So there's a large spectrum there. Whereas, these trucking companies, I hate to say it, but if there's a major accident in such a large vehicle with a small motor vehicle, tendencies to have injury or death is it gets up there.
Absolutely, yeah.
So that's why I would suggest, besides having your commercial auto liability, having an umbrella to cover you for a couple more $1 million. So what would happen with the umbrella is, if you have $1 million auto liability and you have a $3 million loss due to death, the insurance company's only going to pay out the $1 million. If you don't have an umbrella to cover the rest of that, they're going to be coming after the company. Mm-hmm.
And an umbrella covers just a lot more.
Anything in excess of the auto liability. Mm-hmm. And under the umbrella, that's why it's called an umbrella. You can put your liability under there. Mm-hmm. You can put your auto under there, and you can put your cargo under there. So it's it's an umbrella. It covers everything. All of those. So it's wise to have something. I would say, especially with a trucking company, to have the $1 million policy for the auto, which is common in New York State, and then having an umbrella to help you to get another $3-4 million.
Yeah, and one thing with insurance is it's not really like once you're at a high level, it's really hard to continue on. And there was a fellow YouTuber that I watch, and he got whacked by high insurance, and at the end of the day, it's not worth trucking, so you're going to shut the company down.
Your insurance poor at that point.
Yeah, if you get to that point, you pretty much either have to shut down or start a new MC number or something. You can't, and that's why it's so important to do preventive. I think preventive maintenance or preventive things. With your insurance company that you're with now, say, hey, I do this and this and this and this and this, and look at your deductibles, look at those different things, and get them at the right spot, so that way you're not hit with this big surprise.
Yeah, that comes with doing reviews. When you do your reviews, you get some sort of direction as to, hey, listen, we've got some high claims coming out, but they're all small amounts. This is just fictitious, and you got a lot of small claims. Let's try handling these on your own, maybe, if you're in the position to keep your premiums down, because what's going to happen is, if they pay a bunch of $5,000 claims and they jump your premium up, you could almost be paying more in premium over the next few years, because a claim will start dropping off after 3 years.
Mm-hmm.
So you will get adjusted in the premium after that, and if there are no other claims involved. So yes, preventive is definitely a what you really need to do, and keep in touch with we can't tell if somebody's put cameras in. We need to know that they've put them in, and the communication has to be there so we can help direct you in the best way to service it the best, and keep that premium low so you guys can stay in business.
Yeah. Build relationships with your insurance agent, right?
Yes.
Like
take them golfing.
Go golfing. Go out to dinner.
Yes. Yep. We go hack up the course.
Yeah. Yeah. So if you guys got questions, type them below in the comments. Let me know, and I can ask Steve as well if I'm not sure. Steve, you sell insurance to other trucking companies, but is it to trucking companies directly, or is it more of a, what's your special?
Our company has to be attached to farming industry, milking, truckers for that, landscape companies, which we've tied it in, but just straight trucking companies, it's not our appetite. Certain companies will have certain appetites. If they're just a strict trucking company, no, we've directed out of that. But if they're tied to a big landscape company like you guys, anything
more so like land and buildings.
Correct. That's just our appetite, and that's other companies have certain appetites also.
Yeah. So we had our insurance with American National, and then we pulled the Flint Creek auto
and liability,
and then workman's comp for both companies.
Yeah, I never had your workers' comp.
Yeah.
You were with a state insurance.
New York State. Yeah. So you would sell insurance though to anywhere in New York State, or is
correct? New York State, Pennsylvania, Vermont. Yeah.
So I'll put your information in the description, and
that would be great.
Yeah, if somebody has a question about something, shoot you an email or whatever,
Absolutely.
give you a call, and yeah.
Absolutely, I'd be more than happy to take any calls or come down and see somebody to go over everything with them.
Yeah, and again, guys, most importantly with insurance is you've got to be proactive with it. Got to be proactive. You got to watch your claims, watch your loss runs. I mean, some of the things we talked about, but if you're not proactive with it, it's probably going to get you somewhere. And the higher the lawsuits go, the more the premiums are going to go up, and you're just going to be paying more and more for insurance.
Absolutely.
And kind of got me in trouble, and that's kind of why we did a little bit of a switch. We were big enough to go into a captive group, and I'll get more into captive insurance, in another video, and we'll talk about captive. But captive isn't for everybody. You got to still watch it, and you got to pay more. You got to pay out of pocket, or be willing to pay out of pocket. So, all right. Well, thank you guys for watching. We'll see you in the next one. Peace out.